Trading and investment strategies work until they don't. We've had the Momos are now no-nos. Different catalysts, different reasons, but money's coming off the table and moving around. Where's it going? Well, we've been talking about it for like a week and a half. Value stocks. We're going to cover that in depth. Earnings target being target down $10. Toll Brothers trying to buy the dip. Cameron Dawson, 810. We're going to get started right now because it's a Wednesday on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Oh boy, 2 down days in a row. I don't think that's happened this year. Well, the day is young. Down 5.5 handle, 64.27. Big overnight range. So we'll see if we can even get near that glow back slow. The buck flat, 98.14. TLT flat ahead of Jackson Hole, 86.72. USO, boy, there's a buyer at 72. We're up 70 cents to 73 even. Gold and silver mix. Gold up 87 cents. GLD 306.14. SLV under 34, down a dime, 33.77. Bitcoin futures up $515 at 113,750. Whoo, a lot of numbers there. Let's bring on Triple D, who's always in a trade cave. But did you see the Tigers game last night?
Look.
Is that the same one you had on yesterday?
Probably. Who changes their shirt during bear markets? There's no time for showering.
Bear market,
changing shirts.
Turmoil.
We're trading 24 hours a day for you over in this STN room. We have no time for normal life. It's just trade cave.
Did you see it or not?
Roar.
Did you see it, or did you just wear the same shirt again?
Talk to me about it. Are you talking about the 200 strikeouts? What are you talking about?
Walk off.
Oh, the double walk off.
Yeah. Yep.
Tigers? Yep. Is this the year?
They were down a little bit. Sports
they
radio.
They were lull in the middle of the season, but I don't know, man. We got to get Eric Jackson back on here to debate Tigers versus Blue Jays. I know he's from North York, so the Blue Jay fan and everything, but this Tigers, man. Tigers. They're
okay. We got to get going. We got Cameron Dawson coming on in 7 minutes. You got a 10-minute rant coming up, so you got to get it going in 7 minutes.
You got to get the 10-minute rant in first. Okay,
yes.
The 10-minute rant. Momentum stocks. Oh no, Momo. Yes, they broke here. Yesterday they had been breaking though. Like this was like the obvious trade, and we've been talking about it over on Stock Trader Network. Palantir had been leaking. Lots of your other momentum names slowly leaking. And then yesterday, the official rug pull. They're like, no, Palantir's going down. We're pulling the rug on all the other Momos. So all the other Momos like SoFi, which had made a new high, key reversal yesterday. Yikes. Lots of other names. Robinhood, ugly key reversal day yesterday too. When we talk key reversal, what we mean is they made a new high above the previous day's high. And Joel will show the charts. Brent's there. Get the charts on the screen. What's going on? There, I did it for you, Brent. Brent was sleeping in the background. Get in here, Brent. There he is.
Everyone wants to see your shirt. Shirt of the day. Shirt of the day.
My shirt is an old bowling shirt from my buddy's dad, Ted.
Oh, Ted. Well, that's cool. That's cool. I like Ted.
Right. Keep going.
Robinhood, key reversal again. So makes a new high over the previous day's high and then closes below the previous day's low. Those are key reversals. Those are very technically bearish. Now, you're a technical analyst, Joe, but that's supposed to be really bad. SoFi, same thing. Key reversal to the downside. Palantir didn't key reversal because it's been leading this charge to the downside, a la Andrew Lapp from Citron. Did he start all this? Is this all Citron's fault? Did he start this?
I mean, the stock.
It was a great call.
Yeah. Double top 190. He caught people flat-footed. Just, going back, I mean, just for you Palantir shareholders, I don't want to ring the alarm or anything, but earlier in the year, this thing went from 125 under 70. What a percentage move that is. And now, so if you do that same kind of percentage move, What are you talking about? 130, 140? But first let us stop going down. 50-day moving average, 152.18. We may see that today if you have that target.
I mean, when you're chasing these stocks, again, when stocks are going up, valuation matters a zero. When the momentum traders have got a hold of it, when the memesters, when, you know, all the social media, all the retail darlings got a hold of something, they don't care about valuation. When stocks start breaking momentum, that's when valuation matters. Why? Because the only traders in there are momentum.
Do this, Dennis. Do this. The value
That's
people
it. Yeah, exactly. Value traders are sitting here looking at Palantir trading 250 times or whatever. I haven't even looked lately where it is. We could go look right now, but its valuation is just insane. So there's no value trader that's going to touch us with a 10-foot pole. Well, when the momentum traders get out, now there's nobody left, and that's where you see this gap between value and growth, and and the stocks come down quickly through there, and they're like, why is it falling so quickly? Because no value investors are interested, and the momentum investors are getting out because there's no momentum anymore. Palantir is trading 250 times forward earnings, 525 times current earnings, price to sales 115 times. Welcome to 1999, folks. I mean, yes, it's a cool story. Yes, they get some government contracts. Yes, Trump, is a fan, but 115 times sales. This is actually probably higher values than in 1999. So, I mean, we've got to have some perspective. We are not in 1999 markets. There's just a select number of stocks that are doing this. A lot of things are priced very reasonable. And the stocks that have been going up over the last week and a half are those reasonably priced stocks. They're moving back into the laggard trade, the lower PE names. They're cool again. Hey, PE is cool again. That's what we're seeing here right now. Does it last more than a week? Well, that's to be determined, because we know a lot of these lower valuation stocks don't have sexy stories. Everybody wants to buy and trade a sexy story. Palantir, sexy story. But that doesn't matter when the stock price is going down and the value investors are not interested, and the momentum investors is like, holy crap, momentum's getting out of this. I'm going to get out for a bet. So that's the issue that you run into now. Does that mean they come in and buy the dip again? Eventually they do. It's just a matter of when. But I mean, a stock like Robinhood, it's back to where it was 3 days ago. I just had a key reversal. Why be a hero and say, okay, yeah, this is it? Robinhood valuation, which obviously doesn't compare to Palantir, but compared to other brokerages, is insane as well. 76 times forward earnings, price to sales 27 times. When you look at brokerages, they typically trade a hell of a lot lower than that. IBKR is the best comparable, and it's still got a pretty high one, but it's 32 times. But then you go in like Charles Schwab, and some of your other ones are 20 times, 18 times. So the banks are 16, 15 times. So, you're talking about something that's 5-6 times more, valued higher than other things. So, it matters now because the stories are breaking a little bit. So valuation all of a sudden does matter. I want to bring Cameron into this conversation here, though, because I know she's got some stuff to talk about value versus growth here, and she's waiting in the background. So let's get our guest here, Brentster.
Cameron Dawson, Chief Investment Officer at NewEdge Wealth. Cameron, you can tell we're fired up today. The markets are moving. How you doing today?
I'm so good. So good to see you guys. Long time no see. And what a day that we're finally getting some movement in what's been such a quiet August.
It has. And so, so this is just a normal sell-off. They're taking a little breather. Are there other things going on? Are there seasonal headwinds here that we have to be, cognizant of in August and September, the worst month of the year?
Yeah, we do know that this is one of the weakest seasonal stretches of the year. Usually the 3-month forward returns from this point forward are much below average, kind of the worst you get in the year. It's nothing cataclysmic, and it's nothing to say that the bull market can't continue, but you also are going into the seasonal stretch having had such a huge, massive, low volatility rally, really led by low quality stocks, led by high beta stocks, which are fragile because, as you all were talking about earlier, when you're trading at very high valuations, just means that there's little room for error, little room for downside surprise when it comes to real fundamentals. And so the way that we think about valuations is that they're not a catalyst. Because something's expensive doesn't mean that it will immediately go down, but we think of it as effectively an amplifier to move. So the higher valuation you're starting point at, the greater the downside move can be because you can take more air out. The inverse works on the other side. We saw that, of course, with international international stocks to start this year, really low valuations, you get an amplified move to the upside. So it's once you get the catalyst that valuation starts to matter, and maybe we're starting to get that catalyst at least in the near term. And the key thing will be if these uptrend charts and a lot of these momentum and high beta stocks can hold, or if we actually start to break some of these uptrend lines that have been really powerful since the April lows.
All right. We saw a lot of potential reversals yesterday with the high beta. These things usually can go on for a day or two. What kind of signals, what are you looking at? I mean, RSP, look at different things on a relative basis. What are you looking at, especially with Jackson Hole coming up? What are you looking for the bulls to do? Where do the bulls need to step up?
Yeah, so one of the things you mentioned RSP and thinking about things in equal weight terms, which is really interesting because one of the things that jumped out after yesterday's trading is how you didn't see a breakdown in equal weight consumer discretionary versus consumer staples. We think that this is the equity market's litmus test as to how the consumer is doing. If that ratio is in an uptrend, it suggests that the equity market is on net bullish about the US consumer or gives the US consumer the benefit of the doubt. If that starts to break down into a downtrend, that's when you're starting to see greater revisions lower in consumer household consumption forecasts, which is what this chart shows. And so we've remained in an uptrend in this ratio, which just suggests that there is some optimism that the equity market thinks is warranted for the US consumer. And I think it's fascinating that that didn't break down yesterday, even though we had this underlying risk off tone to market. So let's see if it holds. There's a lot of consumer data that definitely raises an eyebrow and suggests that maybe the consumer or pockets of the consumer are starting to hit a wall. But on net, the equity market still seems to be fairly optimistic. But I suppose, let's see, we have a lot of retail earnings this week. So this is certainly being put to the test.
This more just defensive, though, like the defensive nature of the stocks, because obviously, when stocks, momentum stocks start going down, let's go jump in our Coca-Colas, let's go jump in our Procter & Gamble's, let's go jump in our utility stocks where we know the cash flows are stable and these stocks can handle recession. Is that more just an indicator that, hey, maybe, momentum is coming out of this market and it's looking for other places to hide?
Yeah, if you were seeing defensives really catch a bid, that would be a sign that people are on net feeling less appetite for risk. And one of the things that has conditioned the rally over the course of the last few months is that it has been led by cyclical stocks, it's been led by high beta stocks, it's been led by low quality stocks, speculative stocks, all these pockets that show that people have been clamoring for risk. So if that starts to change, where you're starting to see more of a risk off tone to markets, it suggests that returns overall are lower. What we typically see is that when value and not necessarily deep value, but more value and defensive parts of the markets are outperforming, you're typically seeing headline returns for the overall index start to stall out at best. And so if we start to see some of that behavior, and healthcare did better yesterday, but healthcare is in a massive downtrend on a relative and absolute basis. So how much of that is a value trap or a falling knife?
The consumer. Let's talk about the consumer. We are going to get a lot more information from the consumer this week. Mixed day. Target, I don't know if they're hitting it more on the CEO stepping down, which I thought would be a good thing. People are going to lows. Consumer sentiment weakened again in August.
Yeah. The consumer is certainly having their back up against the wall. And we've seen the consumer continue to be able to spend through many bouts of dire outlooks about the economy. So it's been a watch what they do, not what they say kind of consumer, which is that consumer sentiment has been depressed effectively since the pandemic, saw a little bit of a rise, but consumers were spending very aggressively or very healthily for the last few years. A lot of that was helped by big savings balances coming out of the pandemic. And a lot of those savings balances are effectively gone. So the question is, do companies have the same ability to pass on prices to consumers as they did during the last inflationary period, which of course was in the wake of all the supply chain disruptions from the pandemic? The current evidence suggests that consumers or companies do not have pricing power with consumers right now. The consumers are really pushing back against higher prices because they don't have a lot of room to absorb higher prices like they did back in 2020 or 2021. And that suggests that the higher input costs that are a result of tariffs, which we can see in evidence are not being paid by exporters because import prices are not falling, so it's being absorbed domestically, that the vast majority of the cost from tariffs is being absorbed by corporates. And the thing is, it didn't hit 2Q earnings because of things like FIFO accounting, first in, first out, also pull forward. You heard that from Home Depot. Consumers really haven't seen the effect from tariffs yet because we did so much pull forward of buying. So as we get into third quarter earnings and as we move through the fourth quarter and the holiday selling season, be really interesting to see if companies start saying, what do I do to defend my margins? Costs are going up. Do I try to raise costs or raise prices and trade off with quantity, meaning I raise prices, but quantity of sales starts to go down? Or do I start looking for other ways in order to save money? Do I start laying people off or cutting CapEx? And that's where this could potentially turn into a broader economic scenario. So it's going to hit margins. It's just not showing up yet. And the question is, what does the market do with that trading at 22.5 times forward?
The question too is, when does it start hitting margins? Because like you said, FIFO, does it start hitting in Q3 immediately? Like when we see, Q3 results coming out, and we're not going to get them again now until October. Do we start seeing that, you think, right away, or is it Q4? Like, when do you actually think we start seeing this? Because some tariffs just went into effect here recently.
Yeah, we were thinking that tariff impacts would be seen in broader data, broader aggregate data, more in Q3 and Q4 than Q2. And so as we went into earnings season, you've had huge beats in the second quarter because people had effectively priced in tariffs to start in 2Q immediately as they were announced. But companies that did so much pull forward. So we're hearing more evidence that the inventory that had been pulled forward has been pretty much drawn down. Of course, it really depends on industries. It depends on individual companies. And so we would expect it's a 3Q issue, definitely a 4Q issue, with maybe 1Q being when we see the majority of the impact. And then the question is, in 1Q, that's when we start to see some of the bigger benefits from OBBB, the recent tax bill. And so do you get some kind of offset that starts to happen? But at the end of the day, we're run rating at $400 billion of tariffs that are being collected on an annual basis, which is just over 1% of GDP. It's a significant number. Somebody's paying for it. And as of right now, it looks like it's corporations.
A couple things still, just staying on the tariff talk here for a second. There's been rumors that maybe with all this tariff revenue coming in, that we do some type of stimulus checks to everyone out there. I don't know if there's anything to those rumors, but I know it's been said, a couple of times and floated in media here. Could that be, like, we know last time we had stimulus checks, it was like flooded in the stock market, it was flooded in everything. It was like just, so do you think there's a possibility that tariff stimulus checks could come later this year, and any type of slowdown in the consumer that just, picks it right back up?
Yeah, YOLO. It all depends on how they're thinking about using this tariff revenue, right? So S&P Global came out and said, hey, we're feeling better about your credit rating because you're raising so much tariff revenue. You're not going to have to issue so many bonds. We know that deficits are continuing to go up. OBBB significantly adds to the deficit, which means that they have funding challenges. And there are funding challenges because you're relying a lot more on T-bills in order to do your funding. You have to roll over these T-bills, hence why they're pushing for lower interest rates. At the same time as you've already wound down things like the reverse repo facility, which has been a source of liquidity in order to be able to fund some of these T-bill purchases going into money market funds. That all aside, effectively, it's, do they use the tariff revenue to not have to issue so many bonds to keep the bond market stabilized? And what does the bond market do if you start to see them say, we're doing stimulus checks instead? I think if that happens, you are talking about a 10-year treasury yield that is would push up towards 5%, a 30-year treasury yield that's 5.5% plus, because people would say, oh, wait, we thought you were going to use this to stabilize deficit issues. In fact, you're using it just to send money out, do helicopter money, and result being higher return premium on debt.
Okay, the other thing affecting consumer inflation, you just mentioned the 2-year, the significance of the 3.5, 3.6 level. We've been waiting for tariffs, to come. That's going to weigh on the consumer. We had big divergence in the CPI and the PPI last week. I guess you get the good news. You want to follow the good news, but you did get some bad news there with consumer inflation expectations as well as the PPI. Where are we going with inflation?
So we've been calling this period stagflation light. Doesn't taste great, less filling. It's different than stagflation heavy, which you had back in the 70s, which was characterized by a big sharp rise in unemployment, as well as a big huge rise in inflation. Stagflation light is hints of flavor, like a light beer, but it has the impact of a slight rise in unemployment or a slowdown in growth and sticky inflation. So we think that in the near term, you are seeing inflation pick back up. You can see it in the prices paid line within ISM services and manufacturing. You're seeing it, of course, in the PPI that we got last week, that there is a pickup mostly in the goods line of inflation related to tariffs. But most concerning, you're actually seeing a pickup in some services inflation. And that, of course, is related to wages mostly. And that could be related to the fact that you're actually shrinking the labor force because of immigration policy. And so we're going into an environment where there are signs of stickiness within this inflation data, that it's no longer decelerating like it was back when the Fed started cutting rates back in September. And I would note that since the Fed started cutting rates in September, inflation or disinflation progress has effectively flatlined. We've gone sideways and are now starting to turn up in inflation. So we're not making a big call that you're going to see a return to 2022 peaks in inflation, but we're saying that disinflation looks to be over for now, which backs the Fed into a corner. What do they choose? Stabilize the labor market or fight sticky inflation? It does seem that if the labor market weakens enough, they're going to prioritize that, because they've already told us that they will consider tariff-related inflation transitory. But I'll tell you that if you're seeing core services ex shelter inflation turn higher, that's not tariff related. That's more related to a shrinking labor force. So, it's a tough environment for this Fed. And I think an interesting conversation of, well, the next Fed may not care, right? The next Fed may just cut rates no matter what. So, all bets are off.
Well, there's going to be, somebody that obviously is very much on Trump's team coming in here. So I think, it's going to be a little bit of an easier Fed, and I don't know if that's necessarily a good thing or not here. Let's just talk, briefly, quickly before we stop you at Jackson Hole. We're going to hear, and, what are your thoughts here of, potentially 3 interest rate cuts this year, or is it going to be less?
So the theme of Jackson Hole this year is about the labor market. So that's going to be fascinating as we think about the dynamics of what's going on in the labor market and that stickiness of inflation. If we think about if Powell talks about the need to get back to neutral because of current labor market data, that implies 3+ rate cuts. It all depends on where you think neutral is. Right now, the Fed has an estimate of neutral at 3%. We're at 4.5% on the Fed funds rate currently. But at the end of the day, we think the neutral rate is higher, and we think that there are, you can see it in the dot plot, many Fed members who think the neutral rate is in fact higher. So the question is are we seeking neutral, and where does that actually end up? And obviously there's a lot of political pressure on the Fed, so we wouldn't be surprised if they actually say, in order to reduce the political fire that is on them right now, they cut rates because they have the air cover of non-farm payrolls, which allows them to not have the ire of, on the political side of things. So it's a very fraught situation and a very tough needle for Powell to thread. But we think that at the margin, they favor weaker labor market data in their decision making, which suggests that they go in September, but they don't go 50 basis points because of the higher inflation.
Cameron Dawson, Chief Investment Officer at NewEdge Wealth. If you don't get her weekly newsletter, which always has a musical tone to it, then you're missing out. Cameron, thank you for taking time out. We'll get you back on again soon. Thank you very much.
Thanks, Cameron.
All right, back
this is such an interesting market here because we have like the S&P barely down, but we have a lot of stocks really getting hit hard this morning here. You know, a lot of the momentum names, Palantir's down 2.5%. You know, a lot of other momentum names down, but then you've got other names holding up fairly well. It's a weird market. I mean, we're going to get into the earnings here in a second, and Target's not good. Micron's getting hammered, MU. It's having a really tough morning here.
Oh, wow.
But yeah, so Micron's down, probably got to be DRAM pricing or something like that. I haven't looked into the details here, and Target's getting hit, but it's such a weird market. I always look, you know, first thing I wake up in the morning, I'm looking for patterns. You know, like, okay, well, what looks like it's going to be, you know, the story, the driver of the day? What's the, you know, happening here? And automatically you think, okay, value stocks, you know, staples are also probably going to hold up well because a little bit of defensive nature of the market. But then you look and you're seeing like, well, Microsoft is up. Well, NVIDIA is up. You know, like there's, you know, Applied Materials trading higher despite, I believe, a downgrade. I mean, there is just a mixed market even within sectors here. So this is a really weird one, folks. This is a weird day to figure out here. Definitely casting, you know, you can clearly see retail, though, showing a lot of weakness here this morning. And this is Target's fault. We're going to blame Target for this, or at least the reaction to the Target earnings. Target 205 versus 203. 25.2 billion versus 24.93 billion. That's a beat on the top. That's a beat on the bottom. They affirm their EPS guidance of $7 to $9. I guess, you know, when you make $7 to $9 in a $94 stock, that's not enough money. So when you have no growth, because comparable sales declined 1.9%, gross margins a little bit lighter than it was. But I mean, we're really reaching here to find a reason that the stock is down. So it's pretty much just the stock is just absolutely hated for all reasons.
Yeah, you think? I mean, everyone wanted this guy out, right? I mean, that's what I thought the popular sentiment was. We're just hanging out near the pre-market lows of the session at 93.33. If I could find something on the dailies, it looked like 95 was support. But let's just keep an eye. I'd be keeping an eye on 93.14 was a daily low. Then 92 was another. These are all in the low. So, you know, pick your whole numbers, 93, 92, and then 90 was your low on May 21st. Don't have the expected move in front of me. This is a big move. I think let's see where we settle today. The low we make today, is it going to be like, you know, an earnings day low and a bounce? We don't know that yet, but big haircut for all the people who have been riding this on the short side, blow through the 50 days. So I'm not selling it down $11, but if I was short
it's a problem that this stock is just, you know, just been hated forever. I've always said it's two companies, three is a crowd. You know, you got Target, Walmart, Costco. Obviously, I've always compared with O'Reilly, Advanced Auto Parts, and AutoZone. I mean, it's just the way, you know, Walgreens and Rite Aid for the longest time, and CVS, and then Rite Aid went away. I mean, it's just the way the markets work, you know, and then not even markets. It's the way that the economy works. It's like you can't seem to have three big guns. There's always one that's kicked out. So, I mean, Target, unfortunately, is the odd man out here. The valuation on Target is a joke compared to the others, but they think Target's in trouble. Like, obviously, you know, the earnings don't say that. You know, the guidance doesn't really say that, but the market's saying it. You know, it's down 10%. They think that, you know, Target is, you know, maybe they're going to get harder from tariffs. I don't know, but this market is pricing in something that we're not seeing because these earnings weren't that bad. And the CEO change, you wouldn't think did it either. So the stock is just absolutely hated.
Buck over the expected move right here. Expected move was $10.
We do want to get into ratings here in a second, which we're going to do, but we're going to keep flying through these earnings. And a stock that is hated is Target. The stock that is absolutely loved is TJX. These off-price retailers just continue to perform, which makes sense. You know, when you have an environment that's slowing down here, people do go shop at the cheaper stores. And I mean, you get, you know, your TJX, you get your name brands in there for half the price because it's the ones that sure it's a little bit, you know, different or something, didn't sell in the store. $1.10 versus $1.01, 14.4 billion versus 14.13 billion. So be on the top, be on the bottom. The guidance, they say they raised the guidance, and they did just slightly here, but it is the most slight raise ever. 451 were analyst estimates. They went 452 to 457. So they literally raised it 6 cents. Whoa, my gosh! You raised guidance in the thing. Again, what we've been saying, the algos just simply read the headlines for the most part. So when it says raises guidance, they jump all over it. Is this stock to chase here this morning? I'm not chasing TJX on a 6-cent guidance raise. So sorry, even though best of breed stocks make new all-time highs, I don't short stocks making new all-time highs. I'm not chasing it either, though.
6-point expected move. Pre-market high, if you want to target 141.79, and that eclipses the former all-time high by $6. So let's see if we can hold into that former all-time high. Keep an eye on the pre-market high.
Then we'll move on to Lowe's, which Home Depot reported yesterday, and they were pretty good. And sometimes that sets the bar a little bit higher for Lowe's, but in this case here, Lowe's actually showing some strength as well. So rarely do you see them both go higher, but that's what we're seeing here. Lowe's a nice beat, 433 versus 424, and 23.95 billion versus 23.957. So beat, just slight beat on the sales, decent beat on the bottom line. They are raising guidance as well, but again, the guidance raise is really slight. So I think companies have finally figured out that you just got to put guidance raise in the press release, because this guidance raise is literally, it's actually weird, because they raised 2025 adjusted EPS, but then they lowered GAAP EPS. So I don't know why they're lowering GAAP EPS. Maybe there's something, some one-time thing in there or something, maybe. Comp sales growth, they see 0 to 1%. That doesn't sound great. I mean, I don't see anything that sounds awesome in here, but I do see that they slightly raised guidance by a nickel, and I guess that's good enough here in this fairy tale land of silver lining markets.
9-point expected move. I don't know why it got to 272, but it did. So if you go with the expected move from the close, that's where we're at right now, right around the 265 area. We'll see if we can hold in there. That's actually been holding up on the 15-minute chart. Kind of got a sneaky feeling you might not see that 272 again, or at least today. And if you want to stock like dips and dives and ducks off earnings, it's Lowe's. It'll be a wild one today. So
dives, ducks.
We got some breaking news here.
Breaking news.
Guess GES co-founders Maurice Paul and Carlos Albrini are going to take the company private at $16.75 per share in cash. Shares of Guess moving about $3 higher here on this trading, about 25 cents below that $16.75 price.
Some things to think about here. This actually should help retail stocks here this morning. But I mean, there's probably some companies that are just like, screw the market. They don't want to give us any reasonable valuation here. They don't care. We don't have an AI story. Or stocks trading 11 times earnings. We'll take the damn thing private and screw you. I mean, I get it. The dividend's 7.25% on Guess. So people, obviously pricing out that this dividend's going to get cut. People pricing out that this company, isn't going to survive potentially. I mean, stocks went from 30 to 13. The founders say, screw it. We're taking it private. I mean, at a certain point in time, valuation does matter when you see stuff like this happen, where valuations get so suppressed when, the bearishness is just there, that the founders are just like, well, if the market can't price ERC stock right, we'll take it private. So we've seen this happen before. I allowed Dell to me back in 2011, I believe it was, or 2010. It's good. It's good sentiment to start seeing some value names and some, obviously founders putting their money where their mouth is and saying, you can't price the right market, we'll price it. $16.75 is the cash takeout price. Very interesting that it's trading up to $16.60. I mean, I would think time value of money is worth a little bit more than that. So I would think, 1662 is an overshoot, but maybe they think like, oh, maybe somebody's going to trump them. I doubt that.
Yeah, they could always go higher. I just at this point, I wouldn't pay over 1675.
I'm just trying to look here. Is it the whole company? Guess announced, yeah. Guess shareholders, excluding the rolling stock, will receive 16.75 cash. So definitive agreement to take private. Yeah, so it is Authentic. I guess they call it Authentic Brands now. Oh, Authentic Brands Group. So this is what the founders will acquire. 51% of guess intellectual property, while existing shareholders, including company founders, will retain 49. Okay. So if you want to hold it into the private, you're still going to have a private company then too. Very interesting. Also, Trump says Fed's Lisa Cook needs to resign. Must resign, not needs to resign. Must resign. So we're getting more Trump talk here right now as well. Lots to chew on here. I'll never get over the Dow. Han Solo in the chat.
I know. I
I
just did. I was just hoping you weren't gonna.
No, I know. I'm not going to go on the tangent on it again, but I'll never get over it. It's just like in me. I'm just mad at the world for that. That Michael Dell took me out at the lows, which I did not want to sell. That and DNA. I know I got taken over on DNA. I was like, no, this stock's going to be $1 billion, and it would have been. But it got taken out. So sometimes you get taken out at bad prices. Continuing on our earnings parade here. We could go, there's quite a few names here to talk about. We could go Baidu. We could go Estee Slaughter. Let's go Estee Slaughter.
Yep.
Burry sold half of it just in the nick of time here. It
Woo!
looks like because EL's down 7% here this morning. The earnings, 9 cents versus 9 cents in line, 3.41 billion versus 3.97 billion. That all sounds pretty darn good. The guidance here sounds okay as well. I don't know where estimates were, but it looks like it was a little bit higher than estimates there on the guidance. So I'm going to say in line, beat, and a slight raise here. But, the market's not having any of it. They're hammering it down. SDEL down 7%, Joel. Thoughts?
76.10 is your pre-market low. Expected move a little over $9. So with a $90 close, it did exceed the expected move, but 81. So if you come back, keep an eye on that $81 level. You also had a daily low at 80. What this needs to do is reclaim the 50-day at 85.10. Let's see if they buy the dip at Estee Lauder.
Joel flying through these technicals here. And then last night, let's go to the home builder here, which is the big one of the night. Toll Brothers, TOL. Reported pretty good earnings, 373 versus 359, 2.95 billion versus 2.85 billion. Gross margin, 27.5%. Was slightly down if you're trying to find some hair on the earnings report here. It was down last night at 123. The Brentster covered this really well. And I'm like, what's wrong with this report? Brent's like, really not that much. He's like, this looks actually pretty decent. And then the dip buyers came in 124, 125, 126, 127, 128, 21, 29, and 130. They brought it all the way back up. So dip buyers emerged in Toll Brothers. Stock's been moving here in the last few months. It's been a comeback story for a lot of the home builders here. I don't know if the consumer softens in the second half. That's going to be a good thing. But I'll tell you, DHI has come back. Lennar has come back. We've got obviously Warren Buffett's taken position in multiple home builder stocks here. So home builders are back in vogue.
Did you see the 120.77 print?
No.
Right here. Yep.
Go down to 120?
120.77.
No, it must have been really quick because I saw like 123. I tried to buy it, and when the Brentster was saying this looks pretty good, I was trying to buy 123, but I was like sitting there and I was like chopping around. I was trying to get down on the bid. I just needed to lift the offer up.
It was quick. It was, yeah.
I just needed to lift the offer. Like you always say, when stocks are going up, they don't hit bids. So, you just got to lift the offers when you think they've got it wrong because it's hard to get down on the bid when the stock starts turning.
Throwing out that pre-market low at 120.77. I'm just going to go over the past 3-5 days for the stock, and the buyers had been protecting 130 and currently trading 130.03. So they gotta reform a bid here, or if not, it's going to turn into resistance, and we're going to have some work to do on the downside. But we'll see. We'll see if the stock can regain 130. If you wait for a pullback, like, hey, I don't want to chase this thing 50-day way down at 119.11.
Okay, so the disaster stock of the day, and it is from last night, is Lazy Boy. It's down 21% here. They missed on everything. 47 versus 55, 492 versus 494. It's a miss on the top. It's a miss on the bottom. They see Q2 sales 510 to 530 versus 531, so they're lowering guidance here as well. Never want to see the miss, lower guidance. They always hit the stock in that case, and that is exactly what we're seeing here with LZB. Again, not a loved stock, more hated than anything, and an eternal downtrend here. well, I would say sideways actually for the last few years, but downtrend here definitely in the last 3-4 months when we've had everything trending higher here. So ugly time for Lazy Boy. Is this story over?
My hometown of Monroe, Michigan. If you drive on I-75, you see home of Lazy Boy and the grandfather's son. I almost roomed with him in Michigan, but I luckily lived in another place. Hope he's not listening right now. We got pounded pre-market low 29.07. So I'm sure this is above the expected move. You're only $1.50 off that $29 level. Monthly's 35 was support. So if you want to set an alert, say, hey, we got to get back above 35 before I get interested. Next monthly low is 28.82, and I thought that may have come into play here. So going back a long ways here for Lazy Boy chairs. And, Whirlpool that has not been a good couple days for Michigan companies. Whirlpool, well, they cut the dividend yesterday.
And then they rallied on it. They're like, they're conserving cash. That's what we like.
Yeah. Oh, the old Benton Harbor company, but tough couple days. But you know what? Just tangent. Hasn't been tough for General Motors lately. You see this thing?
Yeah, value market is back. I mean, the value stock of value stocks. And we have talked about General Motors being the value stock of value stocks. I've said before, if I was General Motors, I'd take that company private. But it doesn't matter. It's hated right now. So markets,
what price? What price would you take it private? Maybe we'll get some.
I don't know. Any price you could get all the shares for, maybe it's 65. They're not going to do that. We're not starting rumors here. They're not going to do that. But the thing's trading 6 times earnings. It's actually up to 8 times earnings because it's had the recent run. But I mean, it's been unbelievably, when you compare, like you're going to be sitting there at General Motors thinking you're doing everything right, making a lot of money. And you see Tesla trading 150 times or 180 times earnings and their sales falling. And ours keep going record sales. We're trading 6 times earnings. Like, what are we doing wrong? They don't have a sexy story, but you know what? Value stocks are hot again. And that's what we're seeing, the slow, steady climb. We've been saying this. This is what we've been talking about in the STN room. We've been saying it for 2 weeks. We're like, the momentum stocks are petering out and the value stocks are showing life. And yesterday it was very obvious. I mean, with the SPY versus RSP, SPY was obviously down, 0.6% because it's heavily weighted to mega cap names and some tech stocks in there. RSP was up 0.5% yesterday. We were up yesterday, yes, on the equal weight. Same 500 stocks, weight them differently, we were up. Majority of stocks were actually up yesterday, believe it or not. If you're in all those Momo names, you would not have seen that. But there was a lot of value names trading higher yesterday. General Motors is one of those value names. And you know what? I don't know how long this value rally lasts, but these stocks are all dirt cheap. So, I mean, if the value stocks start to get a story behind them, we're like, oh, the retail community starts saying, yeah, we want to invest in some value names. There's a lot of value names that could go up a long ways.
All right, let's go a little bit of corporate news. Hertz getting involved with Amazon. Now going to sell autos on Amazon. Kind of a stock left for dead, up 53 cents. Filled the gap from perhaps earnings back in April, but more importantly, this trading up 52 cents. It's taking a little bit of a toll on Carvana, down 12.30 here. Once again, a Momo stock loses some of its Momo.
Yeah, and this is one that's broken here now. So it's the worst timing for this headline for Carvana here because it was just starting to break and starting to look. And, now you get a catalyst to drive it lower here. So pun kind of intended. CVNA down $14 here right now. So it's not really hurts the story. I'm more looking at that Carvana story here too. This breaks down. This is the breakdown here now. Does the dip get bought on this? Maybe. It depends on what happens with Momo names overall. If you're trading Momo names, though, I'm going to tell you your tip here right now. And I made some money with this last night. If you're trading Momo names, just put Palantir on your screen. Have Palantir, because if they come in and start buying the dip on Palantir, they'll buy the dip on Carvana. They'll come in and buy the dips on Robinhoods. They'll come in and buy the dips on SoFis and all the other ones. Have Palantir on your screen. It is your leader of Momo. There is no other. So last night, we were trading the STN room and Palantir started rolling over. I'm like, well, I'm shorting Hood. I'm going to get Hood's trading up. And I'm starting to short some of the momentum names because Palantir was down $1. Then it was down $2. Then it was down $3. You knew eventually they're going to start rolling over the other names too. I was like, I didn't like the fact that Bitcoin was trading higher, but Hood ends up going down and ended up being down $1.50 last night because Palantir's was dragging them all down. So Palantir is your absolute leader of the Momos right now. So keep an eye on it. Even if you're not a Palantir, even if you hate this stock and like I can't have it on my screen because this valuation's not, or if you love this stock, and you just trade Palantir, use it as an indicator for all the other momentum names because it is the best indicator right now. No, don't look at the VIX. Oh, the VIX is going up. I better sell someone. No, the VIX lags, man. Palantir has been telling you for a week that momentum stocks were going to start to roll over. It's been telling you that for a week. Look at the Palantir chart, Joel. Bring it up here. I mean, if we look at the dailies, we started going down 5 days ago, and Andrew Left started getting bearish from Citron. So, I mean, Palantir has been telling you for a week that it's time to lighten up momentum names. And now, people start to realize because that's a really bad day yesterday and the continuation here today. Does that mean it's over here? No. Maybe Palantir turns around and rebounds. Then you'd be buying momentum names. What I'm saying is Palantir is your indicator, not the VIX. Forget about the VIX. It lags. It's not a good indicator. It's an indicator for somebody to come in that hasn't been in the market for a month and like, oh, what stock's doing? If you're an active trader and you need the VIX to tell you the volatility is elevated, you don't know what the hell you're doing.
Kathy loaded up last night, according to Jay. She bought the dip. So the other interesting thing that I just wanted to mention
she's
about
the ultimate buy the dipper. She's the ultimate never frown average down trader. Kathy has built her entire career on never frown average down. The entire thing. And you know what? It hasn't worked very well for her, which is shocking because buy the dip, I believe, is the best strategy that's ever existed in the markets. I mean, overall, markets trend higher. You're always buying dips. You're always doing really well. It's unbelievable that she's underperformed the Qs with that eternal strategy. It just shows how poor her stock picking has been. But I mean, she has shown life here as of late. Tesla's helped her a lot. And her ARKK has had a pretty darn good year. So we'll give her some love for this year. Especially since April, her stocks have really come back a lot. She did the circle.
I just want to mention Hood. Hood had good news yesterday. Remember about the sports wagering, and it was trading up and it got a pop. So you have a Momo stock had good news going down on bad news. We'll see. I mean, if there's an area of support, only down 31 cents. I know Mary in the STN room, she was licking her chops, and we just said, sure, Mary, if you want to take a poke at it, sure. You buy it at 107, but don't buy more if it goes down. And where's your uncle point? And for her, I gave her a daily low at 106.13. You did see that in the pre-market. So, you can buy anything.
Mary's been doing really well, though, in there. Like, she knows how to buy the dip and stuff. So,
who else knows how to really buy the dip is Bill Big D. They're the buy the dippers. All right. We are going to move on. We got the ratings?
Yeah. We've got a lot of interesting ones and two very interesting ones. And going back to the car conversation here, we got Avis Budget getting the double downgrade. Getting the double downgrade from Bank of America Securities here. They are taking it from buy to underperform. Pricing, this is CAR. Pricing is a headwind, few catalysts in the short term. Probably not great that they had that Hertz news here this morning.
Yeah, I was thinking that too.
They didn't. They think this note was out before that news actually hit. But I mean, it's important. This is a good day for the analysts to be doing that. As discussed in our July rental car company, this is from the analyst reports. As discussed in our July rental car compass report, the demand environment remains soft. BofA's survey indicates that fewer consumers expect to spend more on travel in the next 3 months compared to 2024. So they're saying the travel should go down. However, latest TSA data points show slight improvement, yet we see minimal positive catalyst for pricing to surprise to the upside. We are more concerned that demand could further weaken with tariffs being passed on to consumers in 2H. We downgrade car to underperform from buy with 28% potential downside.
Kind of hanging out near the pre-market low. So that's not a good sign. So we'll just keep an eye on the pre-market low. Pre-market low currently stands at 148.03. You're only 71 cents away from that. You had a nice move up, not an all-time high because this thing got crazy in 21. But you found resistance at the 50-day. You consolidated. Now you have another move lower. Best thing for the bulls here would be a little bit more consolidation. Next daily low, if you want to focus on a daily low below 148.90, you got a ways to look, folks. Next daily low, 132.76.
This has got to be the ugliest. I'm going to come back to ratings in a second. This got to be the ugliest S&P flat day I've ever seen.
I know, yeah, I know,
I know. And the S&Ps are just not having it. And I mean, Berk.B up, value trade's going to pick up. Staples are going to pick it up. Utilities going to pick it up. Like we can start seeing, it was a mixed market a little while ago, but now we're starting to clearly see what's happening here. And it's the value names. The banks are starting to go green here now too. You're just seeing separation. They're throwing out the Momo names and they're coming in here and they're buying the value names again. That's exactly what's happening this morning here. It's, it's just so interesting that S&Ps, like when you're seeing days where Palantir is down $4.5 more, you got the S&P sitting flat and doesn't care. Showing you like a little bit of like the strength of the overall market. Like people would say it was a really bad day yesterday. It wasn't, folks. It wasn't a bad day at all. Yeah, we were down 40 handles on the S&P, but the S&P equal weight was up. I mean, this was not a bad day. You guys, if you think yesterday was a bad day, you know what a bad day is. You guys, it for real. This was actually not a bad day for the markets. I think the majority of stocks were up yesterday. I never look at breadth, but I bet you the majority of stocks, more gainers than losers, I bet yesterday. It was not a bad day. It's just
it was a good bad day. It was a good bad day.
It wasn't even a bad day. It was a good day for a lot of stocks. Warren Buffett had a great day yesterday. Value stocks had a great day yesterday. It's just the rotation and getting ahead of the rotation and understanding that stocks rotate. And that's the number one driver of price is rotation. It always has been. And if you can identify the rotation early in the day, you often are ahead of it all. Now, rotation changes. That's why I say keep an eye on your Palantir. Keep an eye on your leaders, because if Palantir all of a sudden starts to catch a bid, all those other momentum names will too. Right. Other ratings, Snowflake upgraded to buy at B of A here. Snowflake's been in the gutter, so we got a little bit of a contrarian call here. It's been in the gutter for the last couple of weeks. SNOW trading up. Going to give you a little bit of color from the note here. Snowflake lifted up to buy rating from neutral, 240 versus 220, citing strengthened demand trends and long-term growth prospects in AI and data services. New price target is 25% upside from the last closing price. So looks like Snowflake, B of A analyst, upgrading it to buy. KeyBank also commenting this morning. They remain positive on Snowflake given recent steady surveys. Also, Citizens JMP reiterates their market outperform as well. So 3 analysts, 1 upgrading and 2 defending Snowflake here this morning. That's a good thing. I think Snowflake's one to watch.
Okay, if you're buying this off the hop off all those ratings, you just want to see you don't want to see buying at 197.50 and down a buck at 196.50 or some form of that. But to me, what's standing out to me is $200. And you had your high just under that yesterday, and then your high 2 days ago, just right at 200. That's a big number. If we're just going to jam this thing off the ratings, then we should get to 200 and claim a 200 bid for Snowflake.
Keeping up with the ratings here because there's quite a few. Upstart gets overweight at JP Morgan. This is a contrarian rating here as well because Upstart has been going straight down. It wanted to be defended. It finally gets defended at JP Morgan here. It gets upgraded to overweight. It is trading up this morning, but this stock's been ugly. I always trade Affirm and Upstart together, but we've seen this separation happening lately where Upstart just keeps going down and Affirm, has been continuing going up until yesterday when momentum broke. Is this a turnaround potential here for Upstart, Joel? Is there a level here you're eyeing? Thoughts as, maybe some people are coming into bottom.
3 lows in the same area. So if you're going with this analyst rating, like, yep, the low is in. The low of the move is in yesterday, 61.30. You also had 3 lows under 62. So for me, there's a buyer, firm buyer out at 62. It's now a buck 80 away from, or it's up a buck 80, a buck 30 away from the pre-market high. The dailies don't give me much. Nothing until 65.5. So you get a nice bid in the S&P, the Momo continues. Maybe see that's $2 away, 65.5. But once again, catching a bid off the open and maintaining that bid is important for Upstart.
Novavax downgraded to underperform at Bank of America. Stock trading down here. I'll get this note because when they give these sell ratings on these smaller companies, you always worry that that they're really bearish here. NVAX jumping in, not too bad. Downgrading it to underperform. Price target 7 from 9. Analyst commenting negative mRNA-based vaccine news been a recent tailwind for Novavax shares. We are moving to underperform. $7 price target. Given the recent share movement and increasingly murky outlook for Novavax key value drivers. None of that really makes me feel warm and fuzzy. It's been moving up, so they're selling the rip here on Novavax.
Yeah, and they are, and for good reason. Trading down 66 cents. I'm looking at the chart. I still see it around $9. I mean, considering it was 650 at the beginning of the month, if you still, to me, it wouldn't be too late to lock in profits. We'll see what happens if the bulls want to step up. See what happens here. 850, 860. That's pretty much the pre-market low. Your 4-day and 5-day lows right in that area. If you're looking for a gap fill, you're going to need a big old bid. That not too much. 939 is the bottom of Tuesday's range.
Cocoa up at an overweight at Piper. JP Morgan had a whole bunch of pairs trades on the food stocks. They are upgrading HRL, SJM, MKC. They are downgrading GIS and Kroger. So JP Morgan getting down and dirty in the food stocks as well. You want to talk cocoa? We can bring cocoa up. Cocoa upgrade to overweight at Piper. It is trading up about $1 here this morning. Vita Coco Company.
Is that like it's a drink, right? Is it?
I can't remember.
I don't know. Maybe Brent's can hold me out on that one.
What the hell does cocoa do? Okay, look, now you got me. Vitamin drinks, I think. Let's go look. Vitamin cocoa.
Coconut water, among other things, but they're the maker of the most popular coconut water brand, as far as I know.
Have you ever had it?
Water.
I do not like coconut water, so I will defer.
Boy, oh boy, you got a bunch of confluence here. 50-day, 35.62, halfway back of this move, 35.83. Let's see how it reacts there. If you're looking for a gap fill, non-believer selling into this, top of yesterday's range, 34.08. And I'm surprised we haven't talked about this stock more. How Celsius? Ooh, look, there's a Momo that hasn't given back much as of late. Celsius down 47 cents.
I don't know if I'd throw Celsius. It went from Momo to value, and now it's trying to come back to Momo here, but it became more of a value stock. And we talked about Celsius getting down to 24 times earnings when I said the low was in when it was in the 30s. I said, I think this made the low. It actually got down to $21. That's great. The stock was trading like 22 times earnings. That's a lot of growth there. So that just got way overdone on the other side here. Sometimes these former Momos that eventually become value stocks, which I've been talking about Lululemon in that way. If the growth starts to come back, these things can ignite again, and that Celsius has done that. So Momo to value, back a little bit to Momo, but they don't know what it is now because obviously the valuation is not cheap here, but it's not like 100 times sales. So we just go to Celsius. It is now trading. Well, it's back up to 77 times. So It got cheap down there. It's got 25 times. Now it's popping back up here. So it's starting to look like again, but this has been on the comeback trail. Not one of those is trading near all-time highs. So it's kind of grouped in the middle.
Okay. I think Mark Chaikin, who's coming in the S2 room at 10, I think he had in one of his charts, I think he charts the PE, along with the price, what you were talking about, when it got down to be interesting to see if Mark could pull that chart up. Okay, it's 8:59 here. We have our guest. Guess who's coming on tomorrow? You hate guessing games? I'll tell you. Statman Do is going to be coming. I'd love to get his
stats.
Yeah, we need some stats. I've seen some of his tweets. He's been a little bit cautious lately. He didn't like that XLP going up, and I'm telling you, he talked about this. This was I think I saw his tweet.
August. You turned cautious.
Yeah. Yeah, and
Who's
when
been more right than Statman do? Let's be honest here. You know, he stayed bullish for years and he gets bearish in the August. I mean, sometimes maybe there's something to this seasonality approach here to the markets. And Statman do knows all the numbers. We're talking
Yeah.
Ryan Dietrich, obviously.
And you can't wait to roll that intro. Okay, we're going to roll over to the STN room, see how things worked out from that overnight trading, figure out if the S&P should be down more, or it's just going to be another buy the dip opportunity. We'll see, check the opening imbalances, and then we'll see how the order flow changes. Hop on, get a free trial today. STN, that's where you want to be.